Good afternoon. Well, the one thing I always start off occasions like this is, beyond doubt, I'm the oldest person here. And I can say that because there are not many people for many years under my age still running around. I'm not sure what I do. But the purpose of my saying that, the point of saying that, is that I'm an entrepreneur who set up his first business in 1961 and then spent the 80s in government and the last 5 years in government, and I hope next month to go back to setting up new businesses again. And what I wanted to talk to you about this afternoon, that's what the conference is about, it's about finance really for all of us who are starting up new businesses. Now, in the early 60s, the world was worse in every single particular, save one, for people starting up a business. Regulations were impossible. Taxation was confiscatory, really 83 and 98%. And 1 year in the mid-70s, I legitimately paid 103%. God knows what sort of government it was in those days, but a 5% surcharge on income that's already 98% tax, but there you are, that was the world was like then. And planning permission was much more difficult than it is today. But the one particular that was easier was I could get finance. I could get finance from something not many people do these days called a bank. And I'm talking about startups and small businesses. And the joint stock bank. And in those days, the manager actually lived in the branch and knew his customers. In fact, I think he knew me a bit too well. He used to appear from time to time unannounced in my office just to make sure I was still there, I think. But if there was ever a problem about finance, you would have someone you could talk to. If it was above his limit, he'd go to local directors, and in 24 hours, you get a decision. Well, along came computers. The banks saw a magnificent way of saving money. Started to centralize everything. The ledgers used to be kept at the bank. They centralized the ledgers, then they centralized what was now customer support, and suddenly there was no one to speak to at all. And I don't think there ever will again in the conventional big banks, because the costs of administering a small loan are just out of proportion to the benefit. So one of the areas that I have been encouraging, and indeed if I wasn't doing what I was doing, would probably have wanted to start one up myself, is to look at peer-to-peer lending, internet lending, all the various different companies that have grown and mushroomed over the last few years, and which I think will continue growing, but it's just the early days. And that, I think, is going to bring us back to almost the way in which a small business can get finance once again. It won't do it all. You won't have the advice that you used to get from a bank, but you will get availability of finance. But there is a very big caveat. They haven't gone wrong yet. Somehow, at some time, I do not know where, and I have absolutely no knowledge about this, but one will go wrong because they always go wrong. And at the moment, you're really quite unregulated in that sense. And I have been fighting a rearguard battle to ensure that regulation doesn't get too high, because there is a fine balance between safety to the person who deposits the money and the over-regulation which actually stops it being lent. So in these early days of alternative finance, it is wonderful to see it grow, but it does concern me to that extent that unless we find a way of regulating, not overly regulating, of ensuring that people who are what they say they are and people do what they say they will do, then I think we might be in some difficulty. Now that's straightforward peer-to-peer lending. The equity lending, of course, the Cedars of this world and the others, is another way which is very, I think, is going to have a great future to enable small firms to get funding. We have been doing a lot over the last few years to fund angels, bringing in things like CDIS, and we've seen a big growth in the equity markets. But there is a gap. Most of these are for startups. CDIS is particularly for startups. EIS goes a bit further up. But there is still a gap, which I hope we will see alternative finance actually beginning to provide, for the provision of mezzanine finance, for the provision to help small firms grow. You see, we're living in a golden age for small firms. There have never been a time when it's been easier to start a company. There has never been a time in which more businesses have been starting up. There's never been a time in which we have so many companies today. The Small Firms Report before mine was the Bolton Report in 1971, and Mr. Bolton said, small firms on the way out. As economies of scale are going to make sure that they will no longer exist, and he actually says in his report, it just might be worthwhile for the Department of Industry to set up a small firms department for the remaining years. All that started to change in the early 80s, when we began to get rid of regulation, excessive taxation, and all the other things that held it back. But the real cause of growth has, of course, been the internet. Back in fact, the first thing I did, I think, end of 79, beginning of 80, we brought in something called a workshop building allowance to enable 500 square foot buildings to be built and let. Because surveys had shown us one of the reasons why companies weren't starting up was simply the shortage of accommodation. And in those days, if you wanted to start a business, you literally required a garage. You had to get furniture, you had to get typewriters, you had to get all the paraphernalia, and it was quite expensive. And that carried on until the internet got critical, the end of the 90s. And today we see startups going, well, the startup loan company, for example, 200-300 a week, week in, week out, starting on £5,000 and a mentor. 27,000 businesses started already, about 32,000 people actually employed, and that's continuing to grow all the way through. We see, although the startup scene could not be better, 76% of the 5.2 million firms in this country are sole employees, people working for themselves. And we have seen this enormous change into smaller companies coming along, and then gradually startups, 2, 3, and until today, over 19 out of 20 firms employ fewer than 10. But the real gap in the market, and the gap which has to be dealt with next time round, is mezzanine finance. It's finance to help small firms become the Mittelstand of Germany. We need more private firms, we need more bigger firms, and we need to find a way in which we can help firms to really grow. And that's the challenge, I think, that faces alternative finance industry. It's to find a way not to help startups, that's no problem at all. It's to help companies find almost quasi-equity money, money which is higher risk than normal because it's a small company that's really going, would no doubt command a higher return than normal, but it's a real gap in the marketplace, and it's a gap which I very much hope you as an industry will actually fill. It's really a remarkable turnaround in this country. It's been remarkable last 5 years. Today, surveys show, for example, that the majority of school leavers today want to work for themselves, although they don't know how. It's all over. We find more and more people wishing to take the plunge and work for themselves, and yet we still have not achieved a critical mass in larger businesses. So the challenge I throw out to you and to your industry is very simple. Find a way of filling that gap, because it's a gap in which there'll be great demand and really needs to be filled. Thank you very much. Thank you.